Good morning, everybody. Great to see you guys for day two. And well, for many of you, it's day whatever, year whatever. So, but for everybody that's here, part of the special 2 day event, welcome back. And what we're going to do now is go ahead and kind of get right into the analysis. That's one of the changes that we're going to be making. Sometimes, we spend a few minutes talking about hello or issues of the day and so on and so forth. But I kind of want to get real consistent with the timing on the daily review of these different instruments, especially since we're going to be doing them much more thoroughly, especially starting Monday. So we'll talk more about that in a few minutes. So it'll take more time as we're going ahead and doing them more thoroughly going forward. So the first things first is a real quick hello. Thank you very much for all those nice comments. I appreciate that, and good morning to you as well. And so we're going to go ahead and get right into the analysis, and then we can always say hello a little bit later. All right. So first of all, as we're going ahead and looking at the euro, of course, as we've had to do with the euro here the last few weeks, the first thing we kind of do is take a look at what's going on with the euro in relation to the dollar. Okay, I find right now it's much better to get a picture in a more macro sense as to what's happening with the euro against the dollar. So let's take a look at that real quick. And what you'll notice is something that we talked about yesterday. We've actually talked about throughout this week, isn't it, gang? That this dollar here. Remember what I said? I said, "Ding dong, the witch is not dead on this one yet." Go ahead and there was a great discussion that kind of came up over the last couple of days, where let's see, the mic seems low. You know what? Let me just do another sound check there. Testing 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. How's it sound, gang? All good, loud and clear. That's just fine. Okay. All right. Sexy. Okay. Excellent. Good morning to you guys as well. Okay. It looks like everybody is able to hear me okay. Mike D, you know what? Maybe you could check your speakers just to play safe. Everybody else seems to be able to hear me okay. All right. Hey, thanks, DAS, and good morning to you. Okay. So it seems like everybody's able to hear okay. So check that out, Mike D. All right, gang. Thank you very much. So again, a fine good morning to you guys. And so what we're looking at here now, we got to go back and take this conversation back a few days here, possibly even before yesterday, because we talked about this earlier in the week. The comments were about the dollar, and how it looked like it was in a really bad shape, and ready for for the dollar to become a peso. Now, this is real important because I was the first to acknowledge that, yes, you know what, you got this rising trend in the background. It is below it, and I said, if it weren't for the news that's pending, okay, I would be much more bearish on the dollar. All right, right. We talked about that earlier in the week. But with all of this stuff going on right now, with everything about this debt bill, what I would say was this is a free-for-all. And that's one of the reasons, of course, I've been so guarded the last few days with the trading. Now, starting Monday, come heck or high water, there's going to be, I'm actually going to be introducing some new trades on top of the old stuff. And so it's going to be fun for you guys to watch how I do that. But in the meantime, what I'm kind of hoping on, betting on, if you will, is, especially as you see that they're ratcheting up the rhetoric within individual parties, even using a little bit of minor profanity to shake people up and get them off the fence to do what needs to be done, to get a deal done. As I mentioned, I think I even mentioned it yesterday. Certainly, we've talked about it, throughout the week. If I were the U.S. government, I would go ahead and announce this basically Friday evening. After everything's closed up, the entire market's closed up, announce it Friday evening, giving the whole weekend for people to absorb it, relax, calm down. Yesterday, we saw live announcements where um, a government official was talking about how she had gone to a veterans hospital, and all the veterans, this is all they were concerned about, supposedly a retirement home where she had a family member, and that's all people were concerned about, and so on and so forth. Now, there may be some of that that's true, but certainly there's some hysteria that's taking place around this as well, isn't there? Yeah, no, there's definitely charts, gang. You should be able to see um, uh, the charts, okay? So there's definitely no guarantee the announcement will be made by the second. What I'm just saying is, if I were the U.S. government, I would go ahead and release this personally Friday evening, giving the market the weekend to absorb the data and not have a knee-jerk reaction. I wouldn't want my bill, whether it's Democrat, Republican, Green Party, whatever. I wouldn't want to go ahead and be the person who puts a bill out there and is responsible for tanking the market a few thousand points. You know what I'm saying? Does that make sense? Um, anyways, what we're looking at here now, let's go ahead and bring this back full circle for a moment, okay? Which is the dollar. So the conversation came up earlier this week a couple of times that, boy, the dollar is looking really bad here. My comment was, yes, if there weren't any other government issues, if there wasn't such a major news announcement pending, and I can't emphasize that enough, this is, as far as I'm concerned, even bigger than way back in the day. For those of you that have been around enough years, if you remember that back in the Greenspan days, where we were actually concerned, is he going to say something? When's he going to drop the next irrational, exuberant bomb? Does anybody remember back to the 90s? Remember how we were all waiting with bated breath? Is Alan Greenspan speaking? Where is he speaking? He's doing a speech at 7 o'clock at night somewhere? He might say something. Yeah. Well, even back then, um, how thick was his briefcase? Great. So I've got some of my old, old traders here that can remember back that far. You remember that? Yeah. How thick was the the briefcase? The briefcase indicator. Good. So some of you remember that. And so but the thing was, remember how that news was basically contained to financial news? You didn't see Alan Greenspan every night on the front page of mainstream media, did you? So, the point here is that every single day, mainstream media here is very engaged right now with this big debt issue. Okay, and typically by the time mainstream media goes ahead and gets involved, bigger moves can happen. We already saw the other night, as I had shared with everybody, even those of you that were just visiting us the last couple of days, how, like the other night when President Obama was speaking, the Japanese yen tanked 140 ticks in a matter of moments. Okay, and so those are the kind of risks that we're extraordinarily conscientious of. Um, but getting back now to this U.S. dollar, and that's what we'll bring this full circle for a moment. Notice here that one could say, well, ding dong, the witch is dead here, but my argument was, no, I'm not buying that argument. As far as I'm concerned, the dollar could rally right back in here on a relief that the debt package has been put together. At the same time, I could make an equal and opposite argument that no matter what the government does here, won't necessarily be good enough, and with debt ratings being cut and potentially cut and so on and so forth, that it could actually ultimately just rally up to this resistance, continue down. Either way, now let's go ahead and fully bring this full circle. Either way, as far as I'm concerned, this area is as important as it was back in here, as it has been up in here. All we've had so far was effectively, this one bar break down below the rising trend here, and we immediately had what's called an equal and opposite. Okay, I think some people call these like tweezer patterns or something to that effect, but from my perspective, I just call them equal and opposite. To me, that's a real important thing. When I start seeing a down bar that's almost fully reversed, I pay attention to that. Okay, so I'm seeing that right now And let me go ahead. One of the changes we're going to be doing here as of next week is starting to use the little red orb to more readily identify the areas I'm talking about, because a lot of people seem to have problems with the black cursor, even the thicker one. So this area right here, we had the down bar, and then it equaled and opposited right back up. Okay. And so with the yeah, thanks, Russell. I know a lot of people had kind of mentioned that when I given the suggestions out or asked for suggestions. So that's one of them. But the so as we're going forward there, right now this area continues to be. We could very easily, in a heartbeat, be right back up to this area. And of course, this area has gone ahead and been very important to us, not just in the recent past, right? Okay, where we had 6 breakout attempts. For those of you that are just here for the last 2 days, it's real important to note we had 1 breakout attempt here, 2, 3, 4, 5, 6, and we stayed out of a lot of trouble, but during this time, not getting sucked into the false breakouts. There were a lot of people that got all excited. Fortunately, I was able to go ahead and kind of mute some of that and get people to see what was happening here. And we did go ahead and have 6, false breakouts. So now we're continuing then on the opposite side. We're still having some wiggles and jiggles around this key area. And for those of you that weren't able to join in yesterday, a couple people said today was your first day. Welcome. Going back in history here, let's go ahead and pull this up. Note how important this level has been historically. This goes back to 2007. Okay. Yeah, Joseph, here, let me give you the range, and for everybody's benefit there, it's from 75 to 76. Now, I also have an intermediate band in the middle as well, okay, which is close to 75.42 and 75.62. But the key band there, effectively, you can put it at around 75 to 76 to make it nice and easy for you, okay? So now what I was saying there, going back to 2007, you'll notice that we hit that level, bounced off of it, traded at that level for several months. We pulled through it, and when we broke down through it, we consolidated below it for several months. So much of 2008 was consolidation just above it or just below it. Then we had this huge reversal bar right back up here, where it then consolidated, launched off, pulled back into the band, to the top of the band there. Okay, everybody can see that. Okay, came right to the top of that band, rallied off, had a double top, came back down, right back to that band in 2009. Okay, so hopefully everybody's starting to see, oh wow, that area is pretty important. Then we go forward, going into 2010. Guess where we bounced again, gang? Right there in this area. That's why this area has been so important to me through this entire process. Now, flash forward to where we're at here for this consolidation the last few months. So can everybody see how significant that area has been for the last, several years? Is there anybody that doesn't see that? Okay. Excellent. Yes, it's very much a make or break area. Historically, what's happened is the market's found support here, and we've had huge, pops off this area, which of course is huge sell-offs in the euro. So wouldn't we like to know that? Why is that important? Because I'm not going and trading the dollar. I'm going ahead and trading the euro. Well, if the dollar is rallying, then I'm looking for what in the euro? Exactly, shorts. So it's much cleaner, in my opinion, from my perspective, it's much cleaner to go ahead and find trades right now based on what's going on with the the dollar. Because the clarity comes off of the dollar. Okay, so let me just go take a look. We get in about 15 seconds. We have some news coming out here, gang. The unemployment numbers. Normally, I'm much more excited about these numbers. You guys know I'm all over this. Normally, this is where sometimes I try to make some of my good money for the week. The reality is, though, we go ahead and don't have the um, real oomph, in my opinion. The reason why I wasn't focusing on this as much is because of the fact we're waiting right now with bated breath for this other report. Usually, when you're waiting for something even bigger, the things preceding it aren't that strong. Does that make sense? So normally, if this unemployment number was the big event of the day, then I'm more likely to get my knee jerk reactions and get my trades there. Okay. Um, yes, actually, Uday, it is. It's this format right here. It's via the webinar. What you're seeing right now is the daily format, with the exception now that it's also offered through a couple other formats too, which we'll talk about in a little bit. So, getting back to what I was saying there is that you notice we didn't get a big knee-jerk reaction either way, and you'll notice that we didn't really talk about the trade that I'd be looking for in this situation, because I wasn't really expecting a whole lot to happen here. Normally, I'd be sitting there in this case saying, "Ooh, okay, we're down here at $42.60. What I'd like to see is a spike up to about the $43.40 area. Look to go ahead and get a short off up there. That's what I'd be looking for normally. But I'm not expecting a whole lot off of these news announcements because we're waiting for something much bigger. Okay, there's another learning tip for you. And I'm just, like I said, even though obviously most of the room here is my long-term student family, I'm going ahead, and I know that there's people visiting us. And speaking of which, hi there, Steph. Good to see you this morning. It was great to talk to you last night. And welcome to all of you that joined our student family now on a ongoing basis. Steve V, there is definitely charts. Hopefully everybody can see those charts. If not, give yours a few minutes. It might take a few minutes, Steve, for your charts to catch up possibly. Okay. Otherwise, worst case scenario, go ahead and shut down, restart the webinar, and give that a shot. Okay. So let's go ahead and get back into then what we were saying. So like I said, not a major reaction, not the knee-jerk reaction, and not unexpected. Yeah, John H said he had to go ahead and log off and log back on. So that seems to be, of course, we have a very large student family base here, and then there's some of you that are visiting today. So that would make sense that with the webinars full, that could be a problem. So the getting back to what we were saying here, normally I'd be paying much more attention to this. Would have been spending a lot of the first 15 minutes dedicated to exactly the kind of trade that I'm looking for off this, but wasn't expecting much off this because this only usually works when there's not something much bigger after it. For instance, pending home sales versus unemployment. The unemployment number is typically much more important. Expect to move off unemployment. When Trichet is speaking, from the European Union, he's been the big trump card recently, and so very little happening with the unemployment. I'm much more focused on what happens 5 minutes later into Trichet's speech, and that's where I've been making the big money quickly off of small contracts. Like one contract trades making the 72 ticks. For those of you that were watching me that the last time we had a public event, that was a Trichet speech where it just nosedived, spiked right back up. You remember that? So that's kind of how I play news releases. I don't take the trades in advance. I don't bracket them. I have very specific areas I'm looking for, and then trade if they get to those areas. Now, with all that being said, let's go ahead then and move on. So I just kind of want to show you with the dollar versus the euro. So you see now we're in this really ugly consolidation on the euro. We've been up here in what I've been calling my speed bumps and that resistance. Okay, now let's go back to the daily chart here. There we go. So now you can see how it's even more clear on the dollar chart why we've been bouncing back and forth than even the euro chart here. Okay, you can see there's definitely important areas here on the euro. What I'm basically waiting for is the U.S. debt announcement to come out. Once that comes out, then I'm going to be far more willing to start taking very specific trades, which I'm going to be sharing next week here on this. Okay, very specific trades relating to this, and so there's even shorter term. So even if the daily is not cooperating, some of the things that I'm going to be looking for on an intraday basis. The gold here, let's take a look at that. All right, now even for those of you that are kind of new to the student family, what do you see here with gold? Help me point out a couple of things. Yeah, you know what, Dilip, I tell you what, since you're part of the long-term student family, do you mind if I do that for you like tomorrow? We have all those people visiting, and you remember like yesterday I ran way over on my time, and John had a lot of good things to share yesterday as well. Hubert's going to be joining in a little bit, so I'll be happy to take good care of you on that tomorrow. That'll help a lot of people. Okay. All right. So as we're talking about the intraday, a lot of people are going ahead and saying up on the daily and a mess on an intraday. Yes, that is 100% correct. The 5 minute, 15 minutes, so the 5 minute here is sideways. The 15 minute is snaking and chopping back and forth, Swiss cheese. And of course, I call it Swiss cheese because it's poking holes back and forth through the key support, and it stinks. The 30-minute chart, snaking and Swiss cheese. The hourly chart, kind of snaking and Swiss cheese. No good clear-cut trends except for the daily. Now, we've talked about this extensively because for those of you that have been with me, you know I've been very bullish on gold here recently, despite the key levels that we're at. Resistance-wise, I was very bullish on gold. Of course, now that has since waned, and the reason why it's waned is because we're at very lofty levels, right? We're at all-time highs, and you've got this pending news announcement. So right now you have this flight to safety, excuse me, not necessarily quality, flight to safety in gold in advance of the U.S. debt. Again, for those of you that weren't here yesterday, what do you think could happen here after the announcement comes out from the government? Yeah, it could absolutely collapse. Absolutely. A flight away from safety. That's right, exactly. So, but the risk, is there more of a risk that it's going to spike up when it's already at all-time highs, or is it more of a risk that it could actually pull back? From a preponderance of the evidence perspective, more likely, is it more likely just to continue to spike when you're already at all-time highs, or is it more likely to pull back? And that's what we're really looking at here. Yeah. So kind of think of it for those of you that haven't just been futures traders or maybe options traders for years. For those of you that started out your career back in the 90s like I did in equities, how many times do you recall seeing like your favorite stock go up, day after day, go up, and then all of a sudden the earnings report came out, and it was a great earnings report, and yet what happened? Exactly. It sold off. Buy the rumor, sell the fact, right? Remember that old expression, buy the rumor, sell the fact? So let's go ahead and apply that logic here. Similar situation. You're sitting up at these highs on gold. So that's where I'm coming from. So now, the daily looks fantastic, but as far as I'm concerned, any swing trades in gold, from my perspective, I wouldn't be in them. They would be cut, gone, out the door. Even now, not wait until the weekend. Now, I personally, Rob Hoffman, that's my opinion, would be out the door on gold. The risk reward of going ahead and having this thing tank versus continue to rally, for me, it favors more risk. Okay, so then then I say, well, that's okay. I'm just going to mix it up with a intraday scalp because I still love gold, right? Well, you can love gold, but then from an intraday scalp perspective, Um, what I'm seeing here is 5-minute chart, 15-minute chart, 30-minute chart, and 60-minute chart are sideways, snaking, and Swiss cheese. So when you go ahead and put the preponderance of the evidence together there, not a great setup there, is it? Okay. So, and again, from a swing trade perspective, I'd be singing a different tune if we were not so close to like an announcement. In fact, here previously when we were looking at this last week and beyond, I was much more bullish. We had this beautiful, gorgeous uptrend here. Okay, that part's great. We got above my resistance. That's all well and good, but now we're just too close to the impending announcement. So I just want to make sure everybody understands what's going on there. Okay, and you know what, Joseph? That's an awfully long post, and right now is probably not the time to look at that. I'll try to go ahead and answer maybe in a little bit, or like I said, let's discuss it tomorrow. Since you're one of the regular students there, that sounds like a real tactical strategy kind of thing, and we're right in the middle of the morning analysis. Okay, so let's go ahead and focus on that. And then we'll get you all fixed up tomorrow morning, okay? That way we can spend more time on it, but today we have visitors, and I'd love to be able to share the strategy in deeper context for you, okay? So, and you can even email it to me tonight if you'd like. You have my email address, so you can email me it, and then I'll be ready to show you some examples tomorrow morning, okay? All right, so basically, let's move on to crude oil here. All right, help me out with crude oil, gang. What do you see with crude oil? Okay, that's what I was looking for. I was looking for seeing our long-term student family, and then also some of the new people, seeing if they're starting to identify it, because it's real important there. So, the first things first, yep, snaking. Second thing, snaking. So the 5-minute and the 15-minute are snaking. Now, why do I call it snaking? Besides the humps here, okay, the reason why I call it the snake is just because, like a snake, it's extremely unpredictable. What basically happens here is that here, no sooner as you think it's going down, bam, it snaps back against you and bites you if you're short. And then it's like, oh man, I caught the wrong side of that trade. Never mind, it's actually a long side trade. Then you go long, and then it turns around and goes right against you. And I've actually seen that happen to the people before, and it's brutal, right? You sit there, you get suckered in short, it goes up, so you get stopped out. So you're like, okay, I'm going to reverse my position, and then I'm going to go long, and then it turns around and goes right back against you. How many people has that happened to in the past year? Be honest about it. I can tell it certainly happened to me a long time ago. And I'm much more conscientious of those kind of things. But yeah, okay, thanks for sharing. Yeah, I appreciate that. So with that being said, rather than going ahead and because that's what happens, right? We're sitting there, we're traders, we're looking for trades, and then it's like, oh wow, look at that. That's a great short opportunity. There it is, breakdown. I'm going short, and it snaps back against us, stops us out. Then all of a sudden it's like, well, geez, maybe it's actually it's going up. It broke this little pivot high over here by a couple ticks. I'm going to go long, and then it kind of pulls back. It's like, yeah, I'm going to add to that position. So now you got your cost basis up here, and then it actually pulls back down. And that's one of the problems with adding to a position, right? Everybody says, hey, add to your winners. And there's definitely pros to adding to your winners, but there's also cons. As you add to your winner there and bring your cost basis up, if you get a significant pullback and you don't trail that, then you can be in trouble. Does that make sense? So that's something to watch out for. If you take an entry and then you add into it and bring your cost basis up, then you could have a bigger position as it pulls back here, and then bad things can happen. Okay, so bad things can happen when adding into winners or losers, and we'll certainly be talking about that as we go ahead and go forward. And so the key is if you're going to add into that on the way up, you're going to really want to trail that. Okay. Gary M says, "How did you know how I trade?" It's human nature. We've all been there. None of us are perfect, Gary. The reality is that we've all made mistakes. Look at me, as I shared yesterday, Gary. You know what? Even after doing this for many years, and I started learning the markets, Gary, when I was 15. And in fact, I have some of my long-term student family here. They saw my big book collection downstairs. Up here, I'm broadcasting from the Bat Cave, but or the Trader Cave, if you will. But downstairs I have this big book collection, and even the original books I had from the library back when I was a kid, are there. So I've been doing this for a long time, and I made all the mistakes, and so you kind of get a feel for what those are over the years. You know what I'm saying? So let's go ahead and put that back down and kind of move along. All right. So now with the crude oil, we see the snaking on the 5-minute. We see the snaking on the 15-minute. We see the snaking on the 30-minute there. Then we've got the hourly chart here for the last several hours been consolidating. But now from left to right, that's actually a downtrend. Okay, from up here in the upper right down to here, that's actually a downtrend. But the last 5-6 hours, what have we been doing? Chopping back and forth through that key 20-period moving average. Okay. And so yes, John R., there's definitely that's where this indicator here would come into play. That's where these indicators here come into play. Instead of looking for what I call ping pong here, back and forth, I look for the nice solid trends in that. So yeah, there's definitely different things that come into play there, John. So just kind of trying to keep it real simple here for the purpose of this morning's analysis. You know what I'm saying? Because all the rest of the stuff is stuff that we talk about on a normal daily basis there. And so let's go to the Russell 2000 here. And how about the Russell 2000? Let's go ahead and take a look at this together. Yes, John, that would be correct. That is very important in trend identification, no doubt about it. And of course, the reason why we're looking for that, then we apply all the other things, the pivots, the key support and resistance areas, the price action, all those different things kind of come into play, all right, to get those higher probability trades. That's why, like John was talking about with those different setups and that of mine, that's what he focuses on. So, yeah, no doubt about it. Yes. Now, Christian, you probably didn't hear the question on about the Russell 2000. The question was there was reaction on the Russell at 7:30 Central, 8:30, not the Euro. First of all, usually to be very clear, I'm typically looking at the 8:30 news releases for Euro related trades or Japanese yen trades, not the Russell. I usually, Rob Hoffman, I can only think of once that I went ahead and utilized the Russell 2000 as an early morning trade, and that I ended up having to work that order, work that trade. From my perspective, gang, there is not enough volume and liquidity. Look at how this thing was trading right before the news. Does everybody see that? 100 to 160 contracts. Yeah, okay, so you see that now too, Christian? I mean, now, so picture that 160 contracts versus the same period on the euro, thousands of contracts. I just, like I said, um, from a volume perspective, I'm looking more for the euro reaction. Yeah, liquidity, exactly. It's a huge issue for me that I look for. Okay, and not just because me that I'll trade bigger size too, and not just small size, but really, I mean, we have a lot of people here. We have a lot of one contract, two contract traders, and we also have institutional size traders. See what I'm saying? So what you can do now, the S&P is a little bit different. The S&P is more tradable in pre-hours. The overnight, though, typically I like to stay with the euro. Now, let me be clear for those of you that don't know me. Historically, the S&P for many years was my primary trading vehicle. Okay, just to be clear, the S&P was my primary trading vehicle for years. Okay, so that, but the S&P is much more choppy than it used to be. And you know what? The S&P has lots of volume, but how many of you have ever been sitting out there, even with your one contract trade, seeing thousands of contracts on the bid, thousands of contracts on the offer, and yet you don't seem to get a fill? How many of you have seen that happen? Sure, probably a lot of you, if you've been going ahead and trading. So the S&P used to go ahead and be my favorite instrument. It's just, yeah, it's so much slower than it used to be. And a lot of traders are still getting into the S&P as their initial instrument because there's so much written material out there about the S&P. But what I find is during the regular day session, I'm seeing that the Russell 2000 currently from an index perspective moves a little bit more like the S&P used to. Okay, so going back to like the early 2000s. Now, for those of you that don't know the background, I actually started trading. I left kind of full-time equity trading, went to Dow futures first, the big Dow, because I used to go, and I don't want to spend a lot of time on this, but to make a long story short, I used to go ahead and spend a lot of time looking at the Dow Jones Industrial Average to determine which way I was going to take my equity trades the next day. And so basically, what ended up happening was when the Dow futures came online, I'm like, well, hey, that's great. I look at the Dow anyways. I'm just going to go ahead and focus on those Dow futures. Well, of course, they were so thinly traded. I used to sit out there and the comment, I'd sit there, be calling an order into the pit, and they'd be like, working, working, working. I'm like, is it filled yet? No, working, working. And I'm like, okay, that just happened for too long. And so I left the big Dow and I went over to the S&P. And the S&P back in the 2000s, especially earlier in the 2000s, had a little bit better movement to it. Yeah, you talk about stressful. It is stressful. You're sitting on the phone, and they just all they can keep saying in the phone over and over again. It's like Bueller. It was the same thing. It's like working, working. So I got tired of that. So we went ahead and went over to the S&P. So anyways, getting back to what I was saying was I'm seeing, in some ways, there's still some liquidity issues that are left to be desired, but the Russell's getting better and better, certainly on an intraday basis. But prior to 8:30 Central Time, no, I'm not a big Russell 2000 fan. I've taken like one trade that I can recall in the Russell 2000 early in the morning, and I was like, I'm not even happy with that trade. Made money on the trade, but I just wasn't happy with it. And so that's kind of my thought there. So hopefully that helps. Let me just kind of move on to the analysis here, then get through a couple more of these, and then I just want to talk about a couple of other different changes too, and then we can get Hubert in here and take some questions and that as well. But there's some things I just really want to get you guys apprised of. So the 6A, the 6C, and this 6S, the Swissy, the Aussie, and the Canadian dollar. Typically, I focus on those more for swing trading. We're going to be talking about swing trading a lot more too going forward. I know there's a lot of people that are managing not just intraday positions but swing positions. So got some neat stuff coming up on that next week. British pound, I do want to take a look at that. All right, British pound. Everybody see what's going on there. British pound, we're still stuck at that key resistance I talked to you about yesterday. Okay, I really want to break above that resistance. Look at that hourly chart. Look at those tails just chopping people to death. This was the kind of thing I'm taking about. Everybody should take note of this chart. Okay, everybody should go ahead and pay attention to this chart because this is what I'm trying to warn you away from, and hopefully save you a lot of pain by going ahead and avoiding this. You'll notice here that the hourly chart really technically here is going down from like a 20-period moving average perspective and such, but it's really been consolidating for, look, over a day, right? And so then on top of that, what's happening is you're watching this, and this could picture this now as an S&P intraday chart. Okay, this is what I want you to visualize because this is the kind of thing I often see happen to people like on the S&Ps. They trade at lunchtime. They're watching the S&Ps. This could be a 5-minute chart of the S&P. It's not. It's just to be clear, it's the British pound. But this is something I see happen to S&P traders a lot. They're sitting there through the lunch hour, and I'll bet a lot of you can relate to this. And so they're sitting there going in, watching the S&P, watching S&P. It's going through lunch. It's slow. It's boring. Nothing's happening. Then all of a sudden, bam! Oh, there it is, breakout, and it moves like 4, 5, 6 ticks there. Yeah, no, Sandy, you definitely should be seeing the charts. Everybody should be seeing the charts. It may take a couple seconds for your computer to catch up with the broadcast. Maybe give that a try. Otherwise, you'll have to shut down the webinar and restart it. Okay, so so what happens is, how many times have you gone ahead and watched the S&P trade in a very sideways, tight range? You've seen that a lot, especially in the last few years. That's one of the reasons why it kind of backed off as my primary instrument and was somewhat replaced by the currencies, Russell 2000, other instruments, gold and crude oil. All those other instruments kind of superseded the S&P because I'm getting more range and still getting fills, on the other instruments. Okay, so what happens is it goes ahead and it has this little breakout. This could be the S&P. It could be breaking out 4, 5, 6 ticks, but you're sitting there at lunchtime, bored as can be, watching paint dry. It's the middle of summer. Your husband or your wife is out at the beach with the kids. Your friends are having a barbecue, and you're like, oh, I can't go ahead and come over for this right now because I'm trading and I got to go and pay some bills. And so all of a sudden it starts to break out. You're like, that's it. That's what I've been waiting for, right? I bet you a lot of you are saying, yeah, I've had that happen to me before, whether it's the S&P or another instrument. And then all of a sudden it turns right around, comes back down, and stops you out. Yeah, a couple people saying, yeah, that was me. So, and then all of a sudden you're like, well, okay, maybe they got me once, but they're not going to get me again. I'm going to go ahead and take this short, okay? And because it's going. I'm going to go and take this short, and then bam, it pops right back up. All it does is revert right back to the mean, what I call RTM, reversion of the mean, reverts to the mean, and meanwhile you're risking these stop outs, okay? And then about the time you think you're real slick because you identify the tops and the bottoms, then of course the unfortunate part is that and so you start channel trading it, then it breaks out of the channel, you start widening your stops because you don't want to keep getting taken out, and then you abandon the stop, and then bad things can happen. So basically, that's something, it's kind of how I look at the S&P. Now, we're not looking at the S&P right now, but we were talking about it a few minutes ago, so I want to follow through with that conversation. And let's look then in closing on the British pound. So the British pound here, the 5-minute chart is a mess. The 15-minute chart from left to right is a mess. The 30-minute chart is a mess. The hourly chart has also been consolidating since yesterday. Do you see how I'm looking at that? And I'm thinking, where's my high probability trade? Do I go long here? Do I go short here? What do you do with that? You see where I'm coming from? That's right, Nick. That's what we're talking about right now. We're talking about the British pound, but that pattern I showed here is a pattern that we see quite frequently in the S&P. So I was trying to go ahead and kind of kill two birds with one stone. Talk about the British pound, but then since we started off with the S&P a few minutes earlier. I wanted people to go ahead and see that. So I'm kind of just pushing through a couple of key concepts today for people that aren't normally part of the room. Trying to give them a couple of things that they can take away of value, that we look at, of course. And so let's go ahead. I'm not sure what you're looking for there, Nick. Let's see, there's a room. Yes, there's different. If you're talking about the one below the volume here, Nick, or the one, yeah. These are our indicators. So this is something different. This is something you don't have on your charts. But yes, we're going ahead and looking there to tie these together. So we're not going to talk about those today. We are going to be talking about those next week, but we're not going to be talking about those today. I'm trying to keep it real simple, things that you would have on your charting package, moving averages, pivots, support, resistance levels, things like that, Nick. So let me go ahead and real quickly, just want to look back at the euro one more time. Because basically I've got a couple of ideas for this market. The big thing though is I'm really in hurry up and wait mode on going and getting this news announcement out. If it doesn't come by Monday, well, that's fine. Then we're just going to kind of move back to business as usual, except I'll have a lot tighter stops. If I'm trading on Monday, I'll just have tighter stops there. But I'm hoping that the news comes out this weekend and gets it out of its system so we can just move on. But let's talk about that for a moment. Let me put this up. Okay. So, yesterday we did kind of part one. Want to get back to part two on this. And by the way, somebody was asking about this yesterday. Why is Power Charting and Trade the Market still both on there? Because both those companies are still viable entities, and we own both of them. So they're, they're, both still on there. So somebody was asking about that. I'm like, gosh, didn't think that was a big deal. But people ask the silliest things sometimes, I guess. And so, anyways, take a look at this. Like I said, this is something we're trying to put together for you. Nice. Make this a really nice presentation. Hubert's going to be coming on in a few minutes too, but be respectful of the copyright stuff. I don't like to focus on it. You can pause this, take a screenshot of it, look at it later. But I do want to remind people, I always try to do that personally and live here. You can take a screenshot, read this for later too, but understand that, for everybody, whether you're a trader or investor, trading, whether it's equities, futures, options, currency, large potential rewards and large potential risk. Everybody focuses on how much money you can make. Very few people focus on the risk. I've always tried to focus more on the risk, versus just how much I can make. So you got to be aware of those risks. I think one thing, absolutely don't trade with money you can't afford to lose. Breaks my heart when I hear people say stuff like, "Oh, I lost my 401k." I know a big thing that I heard people doing back in the earlier in the 2000s was because they were told by people, "Hey, go mortgage up or take a home equity line of credit on your house. So your $200,000 house, because of the housing market, was $500,000. So people would go out and take these big home equity lines of credit, put it in the stock market. Now they've lost money in the stock market, and they owe all that money on their house. I've just heard some of the wildest things, and I just make sure you're not doing that. Things are going to affect your retirement horizon. So you can read all of this. I just want people to understand that. Just because I've made money in the past doesn't make it in the future. Obviously, though, every day I'm striving to make more money. Always consult your registered financial representative and your risk trading plan before we're doing anything. So I just want to put that out there. Since this is kind of a public event as well. Now, getting back to that, I did want to say there was a lot of people I talked with, both on the phone and going into the evening last night, and then Sarah and the team told me that a bunch of people signed up yesterday. You guys didn't even hear what the changes are. So I hope that you're going to be happy with all the changes that you signed up even in advance. But I thought that was cool that people signed up even in advance of learning what the new features are. So really, every time we have an opportunity like this, it's a chance to reinvigorate, go forth, and do even more great things. The room's been an evolving process over the years, so hopefully the things you're going to see now are going to make it even that much better. So I'm going to talk about these for a few minutes. Then Hubert's going to go ahead and be joining me to talk about some things he wants to talk about as well for learning opportunities. Give me 1 second here. Okay. Now, let's go ahead and go through this. A couple things that are going to be starting as of Monday. Twitter text alerts. I'm going to be giving you guys tomorrow. I'm going to be giving everybody my Twitter link so that you can stay on top of things. Because if I come back in the afternoon, if I'm trading in the evening, if I do a special class, I'm going to Twitter that out to everybody. Okay. So basically, I want to make sure that everybody goes ahead and understands. Tomorrow morning, you're all going to be getting that Twitter. It's my understanding that most people throughout the world should be able to get access to that. And so I want to make sure that this will be good. Because people ask there, why does the special offer only apply for John and Hubert's room? Well, this is John and Hubert's room. Carol, it's John, Hubert's, and Rob's room, so it's all of us. So the Twitter thing here is going to be neat because people always say, "Oh, I didn't know you were going to do this," or I wasn't in the morning, I missed that. I didn't know you were going to come back in the afternoon, or I didn't know you were going to broadcast a special class this evening. Gee, was it recorded? Oh, no, sorry, it wasn't recorded. And so basically this will be something really neat for people. I think that it somehow Twitter, and I'm not the most Twitter savvy, but I know that a lot of my student family I've been testing it with are getting on their cell phones. You guys are getting on your cell phones and the text message. You got a text message on your cell phone, okay? Anybody? So it'll be kind of neat for people to be able to get those. The room is also now available for Apple iPad and iPhone, and we tested that. That the room, and that's going to be real important for you to go ahead and know, because I know a lot of you have iPads and iPhones. You're going to be able to carry me with me remotely. That'll save a lot of you the trouble that you've had to have in the past, where you log off from one computer, try to log on to another, then you get yourself locked out. They've been using the iPad here quite successfully in iPhone, so we're quite excited about that. I don't think iPod, just iPhone and iPad at this point. We're going to be doing some things to clean up the wrist thermometer a little bit. Of course, there's historically been 10 different levels. One being number one being the most conservative, where I don't expect there to be any scaling. Very small lot friendly. To a 10, which is like I call it Goldman Sachs or Rob Hoffman type trade. And very much like the trade that I took, the one day with the loss. So, I have that wrist thermometer there, and we're going to clean that up a little bit, make that a little bit more user friendly. One thing I found, and I never really realized this, but those key support resistance levels I've been talking about, kind of like the Japanese yen at that $1.25, the British pound at the $1.64, the euro at the $1.45, and so on and so forth. Evidently, some people have been going in and using those levels, and then taking those levels and doing their trades with, because they found that they helped them out. It kind of almost gets back to some basics for those of you that have known me over the years. One thing that I'm well known for is quality support resistance levels, and so evidently some people have been using those and asked if I could even do that more. So I'm going to kind of incorporate that a little bit more into the morning review. That's going to be at 8:15 Eastern time frame each morning. We'll be talking about those on the key instruments that I'm following. Additional emphasis on the core rules. Certainly, you guys have heard me talk about chasing. I don't like to chase instruments. The last loss I took back in the room in January 2010, even though it was a much smaller loss, nonetheless, it was a loss. I don't care if it was $1. The last loss I'd taken was, regarding chasing. So for 17 months there, I was very good at saying, look, gang, that one, it's just gone too far. There's too much risk for it to pull back. I'm going to step away. I was usually pretty good with that. But we're going to talk about the other things, the thumps and that. I noticed with my focus group that was here throughout the last several days, that's sitting right behind me right now, some neat things kind of came out of that we're going to be sharing as well. So I'm pretty excited about that. Let's go back here. And now we talked about the little red orb. I'm going to start using the red orb versus the black cursor. I guess that really made a difference for some people, that the red orb just shows a lot better through the webinar. And then some of the gang showed me how it looked on their computers, and the red orb definitely does seem to come up better. So we're going to be using that as it relates to our room. So when I'm looking at charts, I'm going to be using this so that your eye is drawn to it quicker. Also, some of my longest term students and biggest traders also trade grains, sugar, metals, bonds, and meats. So in addition, of course, I'm looking at some of the energy stuff, certainly the index stuff, so I'm looking at gold, crude oil, the stock indices, the currencies, but we're going to be looking at the bonds a little bit more, and sugar and the grains and that to go ahead and meet, to give people a little bit more value in those other markets. I won't be necessarily personally trading those other markets so much, but I'm going to be analyzing them more on behalf of the people that do trade them, that value my opinion and want to know what I'm looking at for those. So right now they're applying what they learn in the other markets over to those markets, and they're like, hey, can we get a secondary confirmation of what we think we're seeing? Like, hey, no problem. So I thought that was a great idea. Again, specific morning review time, going right into it. Some days we start at 8:15, and we shoot the breeze for a few minutes, talk about current events and things to note, things to know, upcoming events, stuff like that. But really, we're going to be focused so that everybody knows every day. Show up 8:15 Eastern, 5:15 Pacific time there, which we have a lot of people in California, and they get up and that's what they do. But right at 5:15, that's when that key those reviews on those key levels and everything are going to be. And then providing an index to the videos. Many of you have the 8 video courses, which is now actually 9 video courses. For those of you that did not know that, we're in the process of creating that 9th course. It'll be available to be distributed pretty shortly. So if you go ahead and go to the Trade the Market site, and if you don't know what I'm talking about there, basically it's always weird looking at your own picture. You ever notice that? It's kind of weird. It's like, oof, what's that doing? If you go to trading courses here, so you go Trade the Markets, go to trading courses, and then you scroll down, you'll see, and these are the videos. In case you didn't know yesterday, again, there was a couple of you that were asking questions, which videos come with Rob's room. These 32 hours worth of courses. You can either just go to the website, buy them directly, or you can join the room and get them. I would suggest from a fiscal perspective that you just, join the room and then you get them as part of your membership. But what's going to happen is there's going to be an index, a time index for each of these videos here that have already been created. So that will help you in learning faster and fast forwarding and rewinding back to places much quicker. So there's right now it's 32 hours, 8 courses that you get with the membership there for the 3-month membership, but there's actually a 9th course that you'll be getting as well. So there's going to be an index with kind of a timestamp. You see right now it just on the videos talks about the different things that are in the videos. Okay, it talks about the different things that are in it, but there's going to be more of a timestamp thing. So that'll be much more helpful. But if you just want to see what's in the videos themselves right now at a high level, you're welcome to go ahead and do that. Okay. More Euro session trades. This is something I used to do. I figured you guys would really like this. And so Uh, so the thing is that another thing here, more Euro session trades. I used to do those Euro session trades more often. I used to love kind of doing those. And actually, like when I go to uh, what you call Germany. I have family over in Germany, and so when I would go to Germany, I would broadcast the live trading room from there and such. Actually, I got stuck over there during the volcanic ash crisis. For those of you that will remember that, so I just broadcasted the Euro session all week, and I actually made some good money, particularly earlier that week. So we're going to kind of get back and do a couple of Euro session trades because I know some of our full-time traders for me, it's one thing. I can't do it every day. Admittedly, I did it a lot more often, back in the day. But with having the live trading room, I try to be my best during the regular 4 hours now. But doing some of those Euro session trades will be real helpful for all of you wild and crazy full-time traders that are trying to maximize your opportunities. And so you're coming in there during the Euro session. And so we're going to be doing some of those. I think that'll be very helpful. Then creating a new member checklist. There's all these different videos. There's all those different tools that we created, like uh, the checklists, the videos to watch, the decision tree. People were asking yesterday about the decision tree. Now, all of that stuff is available to you, whether it's a cost basis calculator, the death by 1,000 cuts, the my way, the highway, the risk thermometers, um, the indicator settings for the different platforms, so you can build them yourself if your platform we don't already have the indicators available for. Um, all those different things. Excuse me. So we're trying to put that into a checklist to make sure, did you watch these? Did you look at this? Did you download this? Those are, kind of get people, rather than trying to figure out for themselves kind of our interpretation, what we think would be a great, somewhat of a learning track, things that we want to make sure you accomplish. Another thing is referring back to the um, uh, dead instruments, what I call them. What I'm referring to like that, for instance, this morning, the British pound. We looked at that and we saw that was really tight and sideways, right? So I was looking at that, showing you how come we weren't interested in that. Well, what we're going to be doing, once we get through the morning analysis, pick out the highest probability trades I'm going to be focusing on. Then we're going to go back and look at the what I call dead instruments to tell you what it would take to make me want to trade those. That seemed to be very important to a lot of people that went ahead and gave that feedback. It's like, okay, they're dead for now, but what would it take to want to trade them? So I thought that was interesting. And definitely very doable. I just focused historically on the ones because, like, the last losing trade that I had back in January 2010 in the room was a situation where I identified what I was interested in on instrument A, and then I went over and got myself distracted temporarily on a different instrument. And then all of a sudden I went back over and it was starting to move. As I was flipping back over, I ended up chasing the instrument down. And which is why, like I said, the thing is, learning from your mistakes is a-okay. You can make mistakes, but do you learn from them? What is that? The definition of insanity is doing the same thing over and over again, expecting a different result. So I like to learn from my mistakes, and I hope you guys do too. And then also find not just learning from mistakes, but finding ways to improve, which is what all this is about. So I think about where the room was years ago to where it's at and how much it's already better. People that have come back to the room like, wow, don't even recognize it anymore. Now with all these evolutions, it'll be just the same way. Another thing is going to try to do a little bit better job of vacations and that. Usually I didn't worry about it too much because John or Hubert covers the room if I take a vacation. But some people like to know as far in advance as I know if I do take a vacation, so that they can schedule their family vacation accordingly. So I'm going to try to do a little bit better job on that. Trying to shift the focus from my track record. I mentioned that the last several weeks of the room, I mean, there were definitely times to prove a point like, hey, this is how I went ahead and did this for so long, focusing on these things. In fact, yesterday I kind of made the list and showed, hey, these were the things that worked so long. So there's definitely time to go ahead and point out how I felt those things got me to that point. But it seemed like a lot of other people were putting even more emphasis on it. And so, from my perspective, the whole track record thing, the funny thing is, even though it was real, nobody believed it. Well, I shouldn't say nobody, but a lot of people didn't believe it anyways. You'd have people call you. It'd be easier to go ahead and sit there and say, "Yep, you know what? I did take a loss, and my last loss was $5, and big deal." It's like, so I'd rather take a one-tick loss occasionally whenever I start to see the chatter increasing about my winning streak. Because even before the 17-month loss, I would have nice runs. Before that, not always, but I would have some pretty decent runs in there, sometimes stretching for months at a time. And so, if I start to see that picking up and ratcheting up the chatter about how wonderful the winning streak, I'd rather just take a one-tick loss and get that out of the way. So I don't want that to have to be a focus that I have to worry about or that anybody else should have to worry about. And I'll let you know if I'm going to do that. I'm like, you know what, gang, I'm just going to take a one-tick loss on this. Because I just don't think that, for me, it's healthy to have to worry about it and have to explain. Like sometimes, for instance, give you an example, like we saw the British chart a little bit ago, and we'd be in a situation like that, where there's just no trade, and people ask a question and say, hey, do you think maybe that trade just doesn't look very good to you because you're trying to preserve your track record? Now, I'm like, no. Do you see that trade is just not a good trade? But that way we don't have to worry about that if we don't, So just get focus on what's important, which is trying to find the highest probability trades. That's all that's important to me. Also, there's these videos are very intensive. That I just showed you. Basically, so we look back at those videos. There's 32 hours now plus the new video. Try again. Here we go. So there's 32 hours of these. There's a lot of information jam-packed into those. A lot of people say they have to watch them several times. What people have asked me for, and I had a lot of requests for that, was to take some of the best information out of this and do like short, like little vignettes. So, for instance, if the market is slow, go ahead and maybe do like a 1-hour session on like my fish hooks, or a 1-hour a session on speed line continuation trades. I'm going to ultimately have a setup entries in the fast part 2 video, but right now just do vignettes on those. My poke trades, different things that aren't even necessarily out there yet. Do little vignettes on them and do them without distractions, where I just go ahead and answer or just do a nice presentation, take questions at the end. These were all done kind of before a live audience, if you will, a live internet audience. So they asked me a lot of questions during, which were very helpful, and a lot of people learned from. But some people who don't like, a distraction during a tutorial, this will be the best of both worlds. They'll get those shorter, more precise vignettes, and then at the same time, then the questions can be asked at the end. So that's a nice two-pronged approach for success there. Then discussing more specifically the stop loss areas based on the different levels. Of course, obviously the room. I've been doing my trading for my trading. I do it all live right in front of you, and I focus on what I'm looking for. But trying to talk a little bit more about stop loss areas in relation to different entry levels, the customer appreciation sessions, and schedule educational topics to enhance learning performance. We had those for a while. We were doing a good job of doing those. John, Hubert, and I ended up having all sorts of different things, multiple Traders Expos, Chicago events, lots of different things there. We haven't been getting as many of those in as I was wanting. The beauty is that sometimes they're just schedule dependent. It just depends on when I can squeeze an hour or two in, and that's why that Twitter thing will be so important, because then I can say, hey gang, I'm going to do a session tonight. Join us at 8 o'clock. We're going to talk for an hour on this or that. Okay, so that's going to go ahead and be very important for people. Okay, and so that one kind of ties with why I'm going to try to get everybody on the Twitter there so that they can join that. Then there's going to be more follow-through discussions, even after being out of a trade. obviously I'm focused on my trades. That's, what I'm trying to do. I'm trying to make my real live money right there on the screen in front of people. So what happens is after I get out of a trade, I'll talk about the trade for a few minutes, what I did right, what I could have done better, those kind of things. But then I move on looking for the next trade. Well, some people, of course, use my information very differently than I do. John talked a little bit about how he uses me yesterday, and I definitely found through this process of inquiring, just having hundreds of different ways that people use me. And I thought that was just really interesting. All these different ways that people find to use me, how they trade other instruments while I'm trading the Russell. They're trading the Dow. While I may take a trade at position A, they're going ahead and taking a trade at position B because they like a more conservative level, etc. So I just thought that was kind of interesting. So what's going to happen is I'm going to try to do a little bit more description post-trade debriefing to talk about, well, this is what I still like about the trade. This is what I don't. That'll kind of help people that are maybe taking trades, beyond. So it's not individual advice to them, but it does go ahead and help people see then, is there potentially a secondary trade that occasionally happens, for myself, or is there something else that I like or don't like and don't, think that I should be in or should consider re-entry on. So that'll help. And have your profit target emphasis, and what that really boils down to is more the trailing stop stuff that I want to talk about. More clarity and focus on the entry of timing. Basically, what I try to do, of course, I always talk about where I'm looking to enter, but I'm going to try to mark that up on the screen a little bit better, because what happens is people come in late. In fact, I think I just see somebody said here a moment ago that they just got here a few minutes ago. I am late. So basically, I think that that will go ahead and help people that just walk in. It's like, okay, well, what levels is Rob looking at? Okay. And then a swing trading discussions, like a weekly review of the possibilities. I think that's going to be really neat. In fact, I was doing it here the last couple of days with my focus group behind me. And that was just really neat stuff. There's a lot of traders in the room that either do options trading, swing trade equities, or ETFs. And then there's a few people too that go and do like forex, like micros. They swing trade those, but mostly it seems like options and equity trades. So looking at kind of a weekly review of possible ETFs swing trades. Okay. That will kind of make that part of the weekly regimen. I'm going to pick a day and a time each week where we're just going to focus on, the swings of the week, if you will. Sharing more setups, usually reserved for off-screen use. Obviously, like when I'm trading the afternoon by myself and there's different tools and techniques. So there's going to be some more things I'm going to be sharing with there that will probably make more sense to you now and give you some aha moments as I share some of those, and because that kind of goes to being willing to show how I use my indicators. Historically, to my credit, I haven't tried to be an indicator salesman. I've just gone and tried to show people how to trade using, price action, support resistance, things that are available. But, more and more people have definitely ratcheted up, as you guys have heard in the room the last few weeks, the last 4 or 6 weeks, have ratcheted up the Reddit, and also when are they going to be available for toss and different platforms and such. You guys have heard all that discussion. Well, first thing first, let me show you how to use them. So I will show a little bit more about that. I think that's going to go ahead and be very useful. It'll tie in with some of those setups that I do off screen. So you'll go ahead and that's going to be a neat benefit next week as well. And then I'm going to go ahead and try to mark up, like we talked about, the entry and risk levels that I'm seeing from my perspective and in my opinion for the different trades. That way when people come in, they'll be able to kind of get caught up on what levels I'm paying attention to very quickly. I know it's very hard for the people that come in, my UK contingent, and different traders that come in from throughout the world just late. They have second careers, third careers in some cases, and they're going ahead and trying to play catch up, getting in, or they have whatever, doctor's appointment, taking the kids to school. I know there's a lot of people that have those routinely, and so they're just missing things, and then they got to come back in and try to play catch up. So I'm developing a marking mechanism. I've been practicing with the different types of arrows, what looks the cleanest and makes the most sense to have those on the board for each of the different instruments. I'm also going to be doing an upcoming Spouse of Trader class. I found myself the last several months in particular, it's this kind of, I mean, I've done it throughout the years, but finding traders that are struggling, one of the things that, and you've heard me talk about this struggle before, when you have the pressures at home, you have a spouse that's putting pressure on you, spouse that doesn't understand what you're doing at trading, what trading's about, and they're putting an enormous amount of pressure on you to perform. You get done with trading. So how much money did you make today? How much money did you lose today? Hey, look, at the end of the week, we need to go ahead and pull out $2,000 out of the account for a vacation or to pay bills or whatever else. And so what I found is a lot of people asking me, I've had these phone calls where I've actually, tried to sit there and explain to people, and I've had a lot of success in doing that. It really took the pressure off some of these traders that I helped on an individual basis. So I'm going to do a kind of a Spouse of Trader class here. Likely it will be in the evening, or I may schedule two, one during the day, one during the evening, or I might just record the one. I haven't figured that part out, but that's going to be coming up real soon, like probably next week, just so that I can help the traders help themselves by dealing with the spouses, and giving a chance for the spouses to sit with their trader partner and ask me questions, because that's something I think is really going to go ahead and be very helpful. Hey, what would you recommend? How do we, set this up, or how do we do this, or hey, what's happening? Why is my husband or my wife not going ahead and making money? I keep asking them, how much he traded for the day, and it's like, well, do you understand that's putting a lot of pressure on them? You're basically trying to force them to perform, and then they're looking at a low probability setup, kind of like that British pound this morning. It's like, oh my gosh, I know that's the only thing I've got to look at today is that British pound, because that's what I trade. But, Mary or Steve is going to go ahead and freak out on me if I don't go ahead and do a trade today. Trying to help the spouses understand the pressures that they put on people and how they can actually help and support their spouse. So I'm going to probably do that class actually next week for the people in the room, and that. I think that's going to be very helpful. It seems like I've been doing that. I'm spending a lot of time doing that on an individual basis, and I think that that's something I could do probably for a lot of people at once and be very helpful. So we'll have you bring the spouses to class that day and answer all their questions and help them, and they'll help you. Okay, and then finally there, a more small account building and trade discussions, including those types of trades on screen. Basically, where I'm going to pretend I'm just a small contract trader for learning purposes, and say, look, gang, here's the deal. I'm only going to trade with whatever it is, 1 contract, 5 contracts, no more than 6, whatever it'll be, and basically tell you, okay, for learning purposes there, watch me how I handle these trades. Here's how I'm going to put my entries. Here's how I'm going to put my stops. So the what we're going to go ahead and do is, I think that's going to be really helpful. For those of you that aren't aware of, I've got like a student who helped me make one of my videos. His name is Lance. He actually was the person that was part of this 6-hour video here, New and Small Lot Trader. Lance joined me in January of 2010, actually right before, as I recall, I took that last loss. And he talks about what he did right, what he did wrong, how he misused me, why he jumped the gun and got too aggressive, how he started losing money, how he backed off, started listening, taking different types of trades that I was taking that he really liked. If in his opinion it worked out for his trading plan, and then how he got on the track and been doing, had been, doing so well. This video was filmed in October or whatever it was of last year, I believe it was. And of course, Lance is very much with me as well. It'd be great to have him come up and do a little segment with me one of these days. Many of you got to meet him in Dallas and also at Las Vegas Traders Expo last year. And so, that, so I'd like to see lots of Lances, lots and so I wanted, it's of course hard for me because I'm not a small contract trader anymore, which, that's great. I should be very proud of that. But, I want to be able to relate it to small contract trading. And sometimes I think it'll be great for just people to watch me trade, as if I were just a small contract trader, because I think people can go ahead and relate to that better. So that's kind of the different things there. So there's approximately, I think there's like, after I weeded it out a little bit last night, merged some things last night, I think that's approximately 24 or 25 different little tweaks, improvements, enhancements, just to take the whole room to a whole new level of, opportunity and learning for people and enhancement. And so with that, yesterday John went ahead and made a very fair offer for you guys to go ahead and join. And a lot of you that joined, like I said, yesterday, you didn't even know about all those tweaks and enhancements. So that's why I said, hopefully I've just impressed you with lots more things that you're going to go ahead and be, now privileged to and get to learn and grow with. And so basically that 32-hour course, there's actually another video. So it's actually 9 courses now, and it's a lot more hours, but that you'll get you'll get that as part of any new sign up there. But right now it just says 32 hours because that course just got completed a week and a half ago. On handling losses and carrying on from there. So I'm pretty happy with that because I meant to do that in January 2010 at the last loss in the room. I didn't, so that's why I spent a couple of days last week going ahead and building that course for people. So that's going to be great. John Hubert's 4-day course comes with it as well. And you saw just on the website there, those things are, people go and buy them, admittedly, off there and never step foot in the room. But of course, from my perspective, I think it makes more sense, to be quite honest, when you look. This is right on the website there for you to go and see for yourself. Instead of paying for that 4-day course there, instead of paying for all the 32 hours of courses, you can get that with part of your 3-month membership, and you get the level 1 and level 2 indicators as part of your membership as well for $785. And that, obviously the bet that I'm taking is that after being with me for 3 months, you're going to want to stay with me for the long term, like many of my students. That's, and if you don't, well, you take away hopefully a lot of great learning. So that's kind of that. And hopefully, like I said, you enjoyed all the different tweaks and improvements now that we've made for this. So with that being said, I'm just going to go ahead and I'm sure Hubert wants to go ahead and do some teaching here now. Kind of bring him up to speed here. Let me go ahead and actually make sure that Hubert's logged in. So give me a second here. Okay, he's here. Just need to go ahead and upgrade him real quick. Okay, it's just going to take a moment there. Excuse me. All right, so Hubert's up there. Yeah, I'm really excited about the room improvements there as well, Mike. Absolutely. Yeah, no, Doug, the 5. Oh, let's see. Let me go ahead. You know what, gang? I guess I did not go ahead and give you the link. I'm sorry. Several people were asking for the link. I'll just give that to you right now. My apologies. Didn't mean to be cryptic. I just was more focused on getting Hubert back up here to give you guys more educational content. So everybody should have the link in their little chat box now. Yeah, Fred, I'm really excited about them too. That's what I said. Like just in January 2010, so much came out of that last, loss opportunity and there. And of course, that loss was a small loss, comparatively speaking, to like my biggest win of the year. And it just, we went forward and did accomplish. You think about some of my, best traders like Lance, he joined me right before I had that loss, like the week before. And so now there's such a great opportunity for people to join me and go forward and see now how things improve here. Some of the things I would have never thought about, but fortunately, a lot of people were willing to step up and help me come up with ideas. A lot of people just say, hey, I don't see I can make it any better. Some people say, hey, I really like it, but here's an opportunity. And I took those very seriously. I merged, hundreds and hundreds and hundreds of different suggestions and put them into a meaningful package, and just want to make sure it was things that I could do. And so these are the things that I can actually do and follow through with, so I'm pretty excited about that. So all right, so the screen kind of flew by there, gang. I can always, try to figure out how to answer some of these questions maybe a little bit later there. Yeah, Jason, I think there's going to be a lot of things. If you guys have questions, we'll see if we can find a little time to answer the questions. I mean, it sounds like a lot of people want to talk about the membership stuff and how to and asking questions about joining and stuff like that. That's all great, but I'm trying to let Hubert have a chance to talk on here as well and teach some more things. Sounds like a lot of people want to sign up, and I hope you do. I mean, I'm brutally honest. It's not just because it's a business, because I really like to go and help people as well, and that's just a fact. But I just, for people that maybe aren't interested in signing up, I want to make sure they still get value out of Hubert's comments. So I'm just trying to be respectful of everybody's time kind of equally. All of you that join me, there'll be plenty of time each day to go watch what we're doing and and learn from those, not just the current new enhancements, but all the things we're already doing anyways. So pretty great time. So basically, Hubert, are you ready to speak there? Yeah. So actually, there you go. The best way to probably go ahead and reach me would be through. Let me just go ahead and give you this little chat box, because Sarah will go ahead and well, if you go ahead and if you want to leave me your name and telephone number to give, if you have a question, if you want to post leave the question and your name and telephone number. Let me just go ahead and give you the link real quick. I hear you, Hubert. Give me just a moment there.
Dude, you're fine. Just keep on doing what you're doing.
Yeah, no, I just wanted to go ahead and show people where they could go. What you can do is you can go to the live trading room over here on the left-hand side. Go to Rob's live trading room, and then you could go to. There's this whole big little thing about the room and whatnot. What you can actually do, and don't sign up over here, gang. Do not sign up over here. Okay, if you'll notice, it doesn't include my videos. It does not include John and Hubert's videos. Do not sign up there, okay? I'm just trying to help you out. Don't sign up there. You could type a question, your name, your email address, your telephone number, best time to call, and then Sarah can get that to me. Make sure you put the best time to call and your telephone number so that I can, because I'm literally making calls till like 9, 10 o'clock, 11 o'clock, 12 o'clock at night, literally, based on when people can be reached, because they're in different parts of the world, or like in Hawaii, so they're 6 hours or 5 hours earlier, so on and so forth. So you're welcome to fill that out there. And like I said, for all of you that took the chance on me in advance and just joined yesterday, didn't even know what these enhancements were, appreciate you taking the chance on me. So I'm looking forward to working with you guys as well. You weren't just waiting to see what the goods were. You already joined, so thank you. With that said, Hubert, I think I'll go ahead and turn it over to you here. I tried to show all the exciting new stuff that's coming up. So back to you.